Nigerian banks, the bonds listed in dollars overseas are doing pretty well. Quite a very encouraging report on the Nigerian bonds, about a dozen of them out there. UBA, Zenith, FBN Holdings, Access Bank, Diamond Bank. And so let's chew this around a little bit with Omotola Abimbola, who is one of the investment analysts at Afrinvest. Good morning.
Good morning, boss.
Thanks for coming. We can't over talk, let me use that phrase. We can't over discuss or overanalyze the state of Nigerian banks, because these folks account for a large portion of our market.
Correct.
If they get into troubled weather, all of us are likely going to sneeze.
Yeah.
Very serious, or catch cold. So, this report says it's been a good year so far for most of Nigerian bank bonds in dollar-denominated bonds. Do you agree?
Yes, I do agree. It has been a stellar year so far, using their words, because if you look at the level of yields now for the Nigerian banks that have Eurobond outstanding, you know, the yields have been compressing for the larger part of the last 1 year. And we can attribute this to both push and pull factor. Push factor in the sense that most global fund managers right now, you know, all over the world, they are on a yield hunt. And they've been searching for high yield, and which are mostly in emerging markets and frontier markets, you know, bonds, because domestically they have very low level of interest rates. And then with all these political risk, you know, happening in the global economy, most are looking for safe havens, you know, to bet on. So that push factor has been directing a lot of funds to most Nigerian banks that have Eurobond issuance. And there is a pull factor as well, you know. Since Q4 2016, Nigeria's economic fundamentals, you know, it's been improving remarkably, partly due to the increase in oil prices, you know, and the rebound in oil production as well. So we now have much more FX reserves available. There is now much more liquidity in the FX market. So that improvement in macroeconomic fundamentals, you know, has been driving the interest in Nigerian banks bonds. But regardless of the macro fundamentals as well, company fundamentals have been remarkably solid as well. You know, Nigerian banks have been resilient, you know, over the course of the last 2 years when we've had economic challenges. If you look at the result of most of Nigerian banks for Q1 and even for full year 2016, they delivered very solid returns to shareholders, starting from the leader of the pack, GT Bank. For their Q1 result, they had over 30% of ROE, you know, recording very solid growth in both top line and bottom line. You know, go straight to UBA, to the likes of Zenith, even FBN, you know, it's been an all-round, you know, positive performance looking at their earnings. So all these push and pull factors, they've been driving the interest that we've been seeing in Nigerian banks bonds.
Yes, let's start with the UBA. And of course, the news is in there, and we're going to put this out there from friends and partners at Stockman, Nigeria. And this came in on Monday. So that's the UBA shares performance in perspective. That's as far as the, you can see the chart there, as far as the share price of UBA is concerned. Of course, that does not reflect the bond. But of course, UBA, according to this report, is the third largest bank in Nigeria. Total assets, 3.7 trillion naira, smaller than Zenith Bank, but larger than Access Bank. Tola, this particular stock has gotten an improved Fitch ratings, and the latest bond is also getting a buy recommendation from these folks in London.
It's also surprising. I mean, if you look at the pricing, the valuation multiple of the bank in the last 1 year, it's been pretty low compared to, you know, contemporaries. For Q1 2016, they had a return on equity of around 17%, and they're trading at a multiple of 0.7 times price to book. Compare that to a Stanbic that has about 20%, you know, ROE, but trading at 2 times price to book. You know, so there is still a lot of mispricing going on in UBA stock, and that has accounted.
Mispricing. I'm going to point you at that. Mispricing that this stock UBA could be higher.
It could be higher.
It should be higher.
It should be higher.
In terms of valuation.
Valuation, because if you compare the valuation multiple to their contemporaries in the tier 1 space, it is still lagging behind at 0.7 times. GT Bank trades at around very close to two times price to book. Same thing for Stanbic. Zenith Bank has gone above 1 times price to book. You know, so this cheap valuation has been driving the interest we've seen in UBA. So far in the year, they've returned nearly 100%.
UBA, you're looking at 9 naira per share. And if we throw out the Stanbic IBTC shares performance, which Stockman folks sent to us yesterday, and you can see the candlestick and all that. We're looking at Stanbic share price around 30 naira per share, while UBA is doing 9 naira per share. This was as at yesterday for folks who are watching this. Even though year to date is there, but you find that Stanbic is significantly higher. That's a breakout, 57.81% price appreciation in 9 weeks. Correct. Trading at 30. UBA, the third largest bank in Nigeria, trading at 9 naira per share.
Well, maybe the price comparison wouldn't be so much important as the valuation multiple, which I'm going to use for the analysis. Stanbic, for instance, similar to UBA's performance, they returned nearly 100% year to date, largely due to the fact that they reported very impressive Q1 2017 earnings. Their top line grew, bottom line also grew by almost 80%. You know, for most Nigerian banks, with the high level of interest rates we are seeing in the market, they've been able to bolster their net interest income, and they're also recording improvements in their FX trading income as well as derivatives income. So interest income solid, non-interest income solid. That's been translating to very impressive bottom line performance, you know, notwithstanding the increase in impairment charges, you know. So for Q1, Stanbic delivered an ROE of northward of 20%, you know, and correspondingly we have seen the valuation multiple of the stock improving from around 1.0 times, you know, less than 4 months back to around 2.0 times price to book at the moment, you know. But looking at the valuation now, it looks a bit fairly priced. I don't see so much for Stanbic. I don't see so much short-term upside to it.
Yes, but let's move on. We've got a lot of grounds to cover. Let's talk about Zenith Bank, another bank that this report talked about, and of course it's already on the street. $500 million in Eurobond, and also got a buy recommendation. Zenith, of course, is according to this report, bigger than the UBA. Talk to us about the Zenith Bank that you're looking at the share price there now on the TV screen. Thank you, folks from